Awesome. Thank you so much, Amy Rose. Yeah, really excited for this panel today. We'll be talking about blockchain-powered cross-border payments, but of course, I'd love to start with some introductions for each member of the panel today. So I'll just run a quick introduction for myself and then hand over to the other panelists because I suspect they'll be able to better introduce themselves. But yeah, my name's Jack Deeb. I'm one of the co-founders of Pier 2. So we are one of the leading staking service providers and blockchain infrastructure providers based out of Australia, but working globally. I'm so pleased today to be joined by Santosh, Vishwasrao, Rahul Advani, and Effie Dimitripoulos to talk about cross-border payments. So I'll hand over to each of those to introduce themselves in turn, starting with Effie, if you're on.
I sure am, Jack. Thank you so much to Deeka, XDC CoinSpot, and all the panelists and attendees today. Effie Dimitripoulos, CEO of AUDC Proprietary Limited, the issuer of Australian Digital Dollar, AUDD stablecoin. My background has been in alternative payment space, both in Australia and in multiple jurisdictions, dealing in many different sectors and across a swathe of regulatory landscapes within that payment space.
Thanks, Effie. And next we'll go to Santosh. Are you on, Santosh?
Hi everyone. My name is Santosh. I have. Hello.
Yeah, we got you. We got you.
Yes, sorry, there was a glitch. Hi everyone. My name is Santosh. I am a cross-border payment specialist. I currently head the entire payment ecosystem for XDC. Prior to this, have been in this space for about 15 years. Have worked with largest payment conglomerates like UAE Exchange, Viz Financials. Have been into the entrepreneurship space where I built a company which was into the Web2 spaces for moving in money from different countries, including Australia, where I also had my own license from Australia.
Awesome. Thank you, Santosh. And last but certainly not least, Rahul, I'd love for you to introduce yourself, mate.
Thanks, Jack. Hi, everyone. A pleasure to be here. And thank you to Deeka for having me. My name is Rahul Advani. I'm based in Singapore, and I lead policy and regulatory engagement for Ripple in the APAC region. Ripple, as you may know, is an enterprise blockchain company focused on cross-border payments, custody of digital assets, and tokenization. And I'm looking forward to bringing a regulatory/policy angle to this discussion.
Thank you so much. And I mean, I'm particularly excited that each of our panelists is based in a different jurisdiction. It really feels like the right composition for a cross-border payments panel. But where we'll begin is with the current landscape of cross-border payments and specifically looking at the current solutions in the space. I'd love to ask, what are the biggest inefficiencies in today's cross-border payment system from your perspective? And I'd love to start with Effie.
Sure. I think Amy Rose sort of stole the limelight for a second there and basically illustrated the three top inefficiencies that the world sees today in regard to cross-border payments, and those are speed, cost, and transparency. So if we take speed as the example, we see that payments across the traditional bank rails today operate in time zone specific, bank time specific. So weekdays, 9 till 5, or 10 till 4, or depending on what the bank timeframes are. They operate within jurisdictions that today is today in Australia and today is not today in another country, right? And so if I'm making a cross-border payment today, it's not somewhere else until tomorrow. We're all going to get confused with all the time zones. So let's not even go there in terms of what the issue is with that time inefficiency. But adding an overlay to that time inefficiency is basically, okay, so we don't operate today in the fiat world 24/7. Therefore, payments can sometimes take, let's say I make a payment on a Friday afternoon. That could easily just due to a weekend, take 3 days to get from A to B, from Australia into the US or into Europe. So that's the sort of inefficiency that we're talking about in terms of time. And then you have a number of intermediaries who are involved, as Talis rightly put it earlier. There are multiple intermediaries involved in today's sector, which include clearing, settlement, Vostro accounts, a bank in Australia, a bank in Pakistan. So there are multiple parties that get involved, and each of those parties play a role in that cross-border payment. And as you can imagine, that means whether it's for AML checking, whether it's transaction monitoring, whether it's any of the multitude of things that need to occur when a cross-border payment is made, that equates to time. And so each transaction, we'd like to say, I want to send money from here, A to B. That could take up to 5 days, up to 6 days. And it depends on which jurisdictions you're dealing with and how many intermediaries there are as to how long that payment might take. And so if you then extrapolate even further and say, okay, what about your point that you made about cost? So thinking about all those intermediaries, everybody's taking a clip along the way, and rightly so. They're providing a service to enable that payment to be made from A to B, or that remittance, or that settlement, or that treasury function to be made from A to B, and therefore everybody needs to take a clip of the pie. And so the inefficiencies in terms of the cost component within that means that there is not a simple A to B, one party, Effie sending money to Jack. Effie is sending money to Jack via 5 intermediaries who need to make payment. Therefore, between the FX and the spreads and the fees and transactions associated with it, the cost then starts to blow out. Transparency is the final, more important one related to the session that we're talking about today about blockchain technology and distributed ledger technology, and that is, if I make that payment from Effie to Jack, and Jack is in Nairobi or wherever he might be, he just needs to be assured by me by way of some sort of communication or a screenshot that I've taken to say to him, yes, Jack, I have made that payment. It'll be with you. And then Jack just waits until it either appears in his account or something is confirmed to say that he's actually received the money. And I think what we'll be talking about today is how blockchain technologies assist in that cost, transparency, and speed of making cross-border payments. So I think I've sort of captured those three main areas of the biggest inefficiencies in that space.
Yes, thank you, Effie. That's very comprehensive. In case there was anything that our other panelists would like to add, I'll just quickly throw to Santosh.
Yeah, I mean, more or less, completely covered by Effie and in details. What I would like to add on and complement on what she just mentioned, within cross-border payments, there are multiple aspects like cross-border payments. When everyone speaks about the efficiencies, using of new age technologies, which is powered by blockchain, and then backed by a stable coin, there are two different aspects. There was earlier era which started off by getting into blockchain space, and then now there is something which is backed by stablecoin, where there is also collateral which is come in place. But within this space, we need to just understand, and maybe I would take upon that as a topic to deep dive. What exactly are these payments, and how would you get segregated, and how these each segregated payment levels would then connote back or relate back to the inefficiencies which we all are talking about, which is speed, cost, settlement, transparency. So predominantly we have P2P transfers, which is peer-to-peer transfers, which is like an individual sending money for his family personal needs, which is one of the biggest use cases which could be deployed in this aspect and can be relatable to all of these three aspects and three elements which we spoke. Jack sending, Effie sending money to Jack, I guess, or that was the example, or vice versa. Someone was in Nairobi. That is the case, which is precisely in requirement of having all of these elements, in place. If you sending money, you sending it in time for a particular reason, and for a particular purpose where there has to be a proof, there has to be a timeline in between, and there has to be a reason why you're sending. So all three of it, which needs to be clearly get covered into P2P kind of a transfer. The next big use case in the cross-border payment comes in B2B, where a business always is in requirement of sending money to another businesses. It could be for payroll services, it could be for the ongoing capex or opex. It could be for multiple reasons. These are all elements why a business usually sends money, and the inefficiencies over there also, predominantly keeps hitting them back. Well, for different use cases, there are different challenges, and each use cases can relate to a inefficiency in a better way. For example, a B2B would always be in requirement of a real-time settlement, because the end use case of that payment is for buying of a certain good, or for like releasing payment against a service, or it could be a business related one. The last in the use case which I would like to touch upon is the trade payments. Okay, again, one of the most important use cases is within cross-border payments, where imagine, there's an exporter and an importer who's involved in this payment ecosystem, has to rely completely on the mechanism of the payment being received for a goods to be shipped, or goods to come in, or the goods to be received, or it could even relate for the goods to be procured. So eventually, I would like to conclude whatever is the use cases wherein I touched upon the three biggest ones within cross-border payments. If you have to drill down what exactly cross-border payment is solving and what exactly are the payment methods, these 3 to 4 inefficiencies which currently are hampering, or rather, let me put it in a way where we have the opportunity, okay, all of us who are in this space have the opportunity to increase the efficiency, to make it more better, to make it more transparent, being a layer 2 solution, being a solution which is run by smart contract, where it can program automation on the entire payment landscape, where pre-funding, which is one of the biggest inefficiencies in this business, going back, I'm just trying to be within the examples which have been spoken and whatever I remember. Speaking about an example of Nairobi or Pakistan or India or UAE, all of these accounts needs to be pre-funded in the erstwhile model, okay, which means there is a cost to the liquidity to the business, and these elements are eliminated in all types of these businesses. So, this is my conclusion, Jack.
Perfect. And Rahul, on the current landscape of cross-border payments, is there anything that you would like to add?
No, I think, Effie and Santosh have covered that really well. I think the one thing I would think about is maybe looking into the future a bit more. Right now, we're talking about people exchanging payments, right? We also have to think about programmable payments. Somewhere down the line, it could be machines talking to each other, especially with the implementation of AI, and you could see payments being exchanged from machine to machine, not just humans involved in that flow. So that's something to think about as we think about the future state of cross-border payments, is that it might just not be humans and enterprises in that flow.
I love it. And I think that takes us very well into, I guess, blockchain's role, perhaps in disrupting cross-border payments. So I think that Effie, and as Effie mentioned, Amy Rose, and other discussants today have talked about speed, cost, and transparency as being potentially issues with the current cross-border payments situation. So I'd love to now look at what can blockchain be doing and what is blockchain doing today to enhance some of these aspects. So I think we've all heard about the rise of stablecoins, CBDCs, tokenized payments, and other things. But I'd like to ask each of the panelists what excites them most with respect to blockchain technology and its role in cross-border payments. And for this one, I'll start with Santosh.
I'll just touch upon my background. I come in from erstwhile Web 2 background, where predominantly I have processed a larger part of me have processed transactions using the Web 2 ways of like processing money, which completely relies on Swift. intermediaries like banking ecosystem, and now come on to the Web3 side from the last 3 to 4 years. So I myself have witnessed, and when I speak, I speak out of heart and speak out of actual experiences of being processed payments and being on the both sides. Okay, what really excites me is the impact which the technology gives, the transparency which it gives to the users, the benefit which gives it back to the businesses. Okay, what we all also need to have understanding about, or what we need to also touch upon, is the business, right? I mean, everyone gets into this cross-border payment businesses, of course, for solving the efficiency, the speed, taking the new age technological elements and going into the market. But there's also an element of profit, there's also an element of making money, and at the same time keeping your customers happy and cutting down on the competition. So to me, one of the biggest exciting part, otherwise it's a highly commoditized market, it's a product, okay, in a highly competitive market. There's nothing much that you would be able to offer to your customers when it comes to payments as a product. Okay, this technology backed by a collateral or a element like stablecoin definitely gives you a big leverage, a top notch to the businesses, where you could give them all of these elements which we have spoken time and over again, in terms of being transparent to them, giving them real time settlements, which is like instant settlement to the transaction that they have initiated, giving them at the best possible price. But all of these in the earlier elements was somehow not possible because of elements which were there into this entire gamut of things. Okay, when the money was passed, okay, it was not passed directly. There were like a lot of intermediaries, there were a lot of elements, there were a lot of technological enablements, which from a regulatory, from a compliance standpoint, which now, okay, are consolidated or are like combined together, which we call it on chain transactions, which is from one point to the second point. So one of the biggest benefits that I feel, okay, which is come into the play, is for businesses. And of course, like when I say it's for businesses, then the ripple effect of that goes back to the users who are like trying to use this service within the new age technology, backed by stablecoin, using blockchain technology. That's something I would like to highlight.
And speaking of the ripple effect, and maybe going a bit deeper into stablecoin. So I was in Hong Kong last week for Consensus, and there was an exciting announcement about a Hong Kong stablecoin. But of course, some of our panelists are already excited about stablecoins for their own reasons. So with stablecoins being used as a tool for enhancing cross-border payments, and I'll start with Rahul for this one. How does Ripple see the role of stablecoins in this space evolving?
Yeah, Jack, look, we believe that stablecoins have the potential to transform the global payments landscape. And for the reasons that, Effie and Santosh have talked about it, they offer near instant low-cost settlement. But the one thing that stablecoins do offer is minimum volatility, right? The reason why crypto has not taken off as a means of payments is because there is an element of inherent volatility in it as a payment tool. So stablecoins solve for that problem as well. Now, as you may be aware, we launched our own USD-backed stablecoin, RLUSD, in December last year. And given our focus on enhancing cross-border payment infrastructure through blockchain technology for enterprises, we see stablecoins playing three main evolving roles. One is, as we've touched upon, settlement speed and cost reduction. I think that's been covered pretty well. I'm not going to go into that in more detail. But I think the one area to also consider when it comes to stablecoins is liquidity management, right? Stablecoins can offer near instant access to liquidity for institutions without having to rely on your traditional Nostro, Vostro accounts, which will tie up capital in foreign jurisdictions, sometimes for days at a time. You now have access to instant USD liquidity in the jurisdiction that you're sitting in. And that is a huge benefit. When it comes to trade finance, I think Santosh touched upon this a bit, but stablecoins could simplify the execution of smart contracts so that and also automate compliance checks, provide real-time visibility into your supply chain. So this overall reduces friction, minimizes the need for working capital, and could streamline cross-border trade processes for businesses, including those in Australia.
Yeah, I think, and on the back of that, Rahul, I'm going to rewind a little bit in my time with the Advani Group, where we commenced our relationship with Ripple and trying to onboard a number of money services businesses and cross-border type of businesses to partake in the RippleNet ecosystem and perform these cross-border settlements at a much greater speed, lower cost, etc. And I think the challenges, from everybody probably who's even on this call understands that there are massive efficiencies and programmability and blockchain absolutely is far superior than what exists in the fragmented space today. However, it's actually still fragmented in terms of all the participants, because it does eliminate some of those parties within the mix. And so how do you shift a whole industry sector who's been used to making money in a certain way and move them into the new world of blockchain technologies, where the margins are deliberately a lot smaller, yet the efficiencies are much greater. I think our excitement getting involved in a number of blockchain technologies was the ability to conduct the cross-border transactions a lot more efficient, but also things like having availability of KYC being able to be moved on chain with a transaction in a synonymous way, being able to not have high and exorbitant gas fees, which in today's world relate to, as we said, transaction type of fees. So I think that the technology is very progressive, and you talked about trade payments, and we illustrated this exact example with the pilot we did with Monetary Authority of Singapore, which was specifically about a trade that has three-part payments, and all of these are triggered via smart contract capability, and all of the information is available between multiple holders of importer, exporter, stablecoin holders, the liquidity and the FX providers. And it's all done via a smart contract in a much more efficient way. And again, it can be minutes, but obviously there are fail-safes that people put in so as that there are gates that need to be met to ensure that either AML or invoicing requirements are met, and a number of other factors to facilitate those kind of settlements and payments.
I think next, so I'd like to move to the regulatory considerations and compliance challenges that we are encountering and may in the future encounter as blockchain takes more of a role in enhancing cross-border payments. So for the first question here, I might look to Rahul, and the question is, we've all seen the Australian government and regulators exploring crypto regulation and payments modernisation. In terms of a balanced regulatory framework, do you have a view on what that may look like?
Thanks, Jack. And as Amy Rose mentioned, we're hoping to see some form of draft legislation sometime this year. But we believe that a well-designed regulatory framework should strike a balance between encouraging innovation and maintaining financial system integrity and consumer protections. So there's four main areas that we feel are important for such a balanced framework. One is clear classifications and clear guidelines on what's within the regulatory perimeter. So what constitutes a regulated token, right? That'll help market participants understand their regulatory obligations. For example, a stablecoin used for payments could be treated differently from an algorithmic stablecoin, and in fact is treated differently in many jurisdictions. The second element is a level of risk proportionate licensing. So different activities that all of us on this call are conducting, it could be custody, it could be issuance, it could be trading, it could be tokenization, should require licensing frameworks that reflect the risk profile of that service. This prevents smaller companies that are trying to innovate, from being overburdened with compliance requirements that are not fit for purpose, while it still holds larger players who, who have the ability and the capabilities and perhaps are bringing risk to the system to a higher standard. The third is consumer protections. I think, safeguards such as mandatory disclosures, when it comes to stablecoins specifically, reserve requirements, disclosures, operational risk management, from the events over the last weekend, technology and cyber protections. All of this can protect consumers while ensuring, financial stability. And the last one, I think, is the most important, which is a technology neutral approach, right? We're not here to regulate the technology. We're here to regulate the activity being conducted by the technology. So the framework should focus on the outcomes. So is it consumer protection? Is it market integrity? Rather than the technology that's being used, and that will allow room for innovation.
I love it, Rahul. Thank you. That's very clear. And Effie, I know that you have a lot of experience in this area as well. So I'd love to throw to you for the regulatory challenges and how that interacts with blockchain technology as well.
Yeah, and I think I'll rewind to mention, where I started, which is basically navigating alternative payment space globally in multiple jurisdictions. We absolutely recognise the importance of regulatory clarity for the types of services and businesses and products that are being offered in the marketplace. And it's been a challenge not having that regulatory clarity from the outset of launching the business, because you want to be an innovator, but you don't want to do things in such a way that you've got to shut shop the minute that regulation comes in. So of course we basically structured the business to say, well, of course you have to put consumer protections first. You look to the best practices from around the world. You establish a framework that tries to set some standards or meet standards that are better practices from around the world, until such time that regulation does catch up. And we've been very vocal and active in all of the consultations, whether that's treasuries, ASICs, AML consultations, participated in pilots, so as that we can help to educate all the current incumbent players, as well as the people in that traditional space, so as that we can get that buy-in that we know is needed. I think somebody mentioned earlier about things like stable coins offer that solution for that crypto volatility that people talk about and that people are scared about. And what we saw happen on the weekend, as Rahul sort of pointed out there, is basically you say, okay, well, what do we do to make things better? And regulation does play a big part of that. So we're pleased that, we've actually got some movement. And as Amy Rose says, we feel that it's going to be within the next 12 months that things will be clear. And it's important that we need to have that in our jurisdiction, because other jurisdictions are moving forward at a quicker pace. And we'd love to be able to, continue our innovation in this space accordingly.
And so looking at other jurisdictions, and Santosh, I know you've spent some time in the UAE, but just generally, do you have a view on which jurisdictions are leading in the effort when it comes to regulation? I'll start with you, Santosh.
Yeah, I mean, well, see, there are a lot of jurisdictions. I mean, it has to be jurisdiction specific, role when it comes to the regulatory compliance aspect of moving in money using any technology, or with any new age element, because at the end, all jurisdictions have to abide by the basic laws of having sending money in the right ways, knowing the purpose of why this money is sent, to whom this money is sent, and where is this actual end case of the money. So these are three basic things which are covered in the overall regulatory landscape, from a compliance, from an AML, from all kinds of check. Taking example of UAE or any other country, uh, see, these guys would want to position themselves as a global hub for cryptocurrencies and digital asset. Okay, this means the approach that they would want to take. I don't want to be specific with like a country, and therefore being giving like a general view on how a regulatory framework from these active countries have taken a stance. Okay, what they're trying to do with this approach, they're trying to balance out innovations. Okay, and at the same time they would want to also protect consumers. Okay, and the financial system integrity. These are different elements which you will have to balance when it comes to creating a new regulation or implementing it, or ensuring that the regulation abides by the existing ecosystem which is in place. So while the technology is new, the thing which this technology is doing is been there historically. Okay, so the regulation needs to play a role, which they are doing in a way by balancing it out, the protection as well as the financial system integrity. See, at a federal level, this then boils down to various levels, like stored value facility, a different licensing regulations for a stored value facility, uh, like a different regulations for a crypto asset activity regulations. Then a country like UAE, which touched upon. Okay, it's like Emirates driven, right? So every Emirates would have its own licensing regulatory landscape. A country like US, okay, which will go state wise. So it all depends in terms of like how they take the stance. But overall, at a concluding point, or at a point where this regulatory framework has to come in place, converting into a layman's language, is when the money comes in from a source account, that needs to be tracked. When it gets converted into a digital asset, which is what we are talking about, is a crypto, which is a stable coin, that moment of money, which would be an on ramp and off ramp, that needs to be regulated. And when that tokens are again flipped back into a fiat currency, that has to be tracked, governed, and has to be compliant, in all the ways which currently are happening. That's the basic understanding, segregation of what this entire ecosystem is, and how it could relate back to the regulations, to the various licenses which every country would issue to businesses for its users.
I'm glad that you mentioned the US, Santosh, because it seems like everyone's excited about what's happening in the US at the moment. But Rahul, with spending a lot of time in Singapore and being based in Singapore, is there anything that you'd like to add for this one?
Yeah, Jack, I think, and again, to echo what Santosh is saying, no one's advocating for copy paste. Each jurisdiction is unique. It kind of, the local nuances that need to be accounted for, local regulatory systems, legal systems. But I think there are best practices that we can learn from, right? If you look at Singapore, where Ripple, we have our APAC headquarters, we're licensed in Singapore. So we have a major payments institutions license for digital payment token services. The Payment Services Act over here provides a comprehensive framework for regulating all payments, not just digital asset payments. So that includes stablecoins, crypto, as well as fiat payments. And it's got a flexible licensing regime that's calibrated as such. Singapore also fosters innovation by allowing fintech firms to engage in pilot programs. The MES also has a regulatory sandbox where they supervise firms under close supervision. If we look to Hong Kong, Hong Kong's licensing regime for virtual asset trading platforms focuses a lot on anti-money laundering compliance, as well as robust, consumer protections. And that's making it an attractive hub for Web3. As you mentioned, you were consensus last week. A lot of Web3 firms are setting up in Hong Kong. But going back to the US for a bit, for the first time, we actually have a pro-crypto president in the White House. And I think just within a month into the new administration, we're already seeing a lot of positive movements on crypto policy. So President Trump has signed multiple executive orders pronouncing the important role crypto, blockchain, and digital financial technology all play in the US. The creation of the president's working group signals that establishing regulatory clarity for the industry is a top priority. The SEC on the regulator side under acting chair Uyeda has quickly set up a crypto task force to hit the reset button and figure out how to take this forward. And they've already taken a major step by rescinding SAB 121, which now opens up the door for banks to crypto custody, custody crypto assets. So we have a very optimistic outlook on the future of crypto policy and regulation, in Singapore and Hong Kong and the US. And we feel that the US's approach will play a significant role in ensuring that crypto is a part of the global financial infrastructure moving forward.
Thanks, Rahul. So just taking stock with where we're at, we've looked at the current landscape of cross-border payments. We've looked at how blockchain is positioned to disrupt and push forward cross-border payments. And we've looked at adjusting for regulation and some of those challenges and opportunities. Just noting that we only have a couple of minutes left, I'd love to quickly look to the future and just give each of our panelists for a final remark an opportunity to share one of their expectations for the future. This could be anything, how blockchain's going to disrupt, or things that we're going to see in particular jurisdictions, advances, any technological advances. So pretty broad, but I'd love to hear what Effie has to say first.
Oh, that's a gauntlet that you've thrown out there. What will I say? I think the interesting thing for me started with when Dr. Charlton this morning talked about the landscape within Australia. So I want to focus on Australia because obviously having an Australian dollar stablecoin, we see the benefits from a cross-border and payments perspective. But I get asked by nieces, cousins, friends all the time, but what do you do with it? And there are plenty of times when I say there is nothing for Jack and Effie to do in terms of buying their coffee down the street or making their payment for their bill, because Australia has a wonderful payments landscape today, and many countries have the same capabilities. So it is in the space that we are talking about, in that cross-border trade payments, remittance, treasury, having a bridge between fiat and cryptocurrency, doing settlements, all of those areas where things like stablecoins will play a space. But I do see that the future is leaning that way. As we said, there are kids in crypto, there are boomers in crypto, there are all parts of society are utilizing or interested in being in this space. And so I think that there's a little bit more education to be had, both in from starting point to where we stand today, and educating businesses and educating services. But I think it's all going to be underpinned with regulatory clarity, to be perfectly honest. I think at that point it's when there'll be more legitimacy in this space and in the industry, and where the TradFi market will intersect with our blockchain sector and make things much more efficient.
Rahul, any bold predictions for the future?
I wouldn't say a bold prediction, but I think what excites me is that we are giving users choice, right? 5 years ago, 10 years ago, you had no choice. If you wanted to send a cross-border payment, you had to go to a bank. We're now giving users choice, where I see that stablecoins, CBDCs, other forms of crypto assets will coexist. And users will use what suits their use case, right? So I think that that's what excites me about the future, is that consumers will finally have choice and control on how to send their cross-border payments.
And Santosh, I think we've just crossed over time, but I'd love to just give you a quick opportunity to answer this one.
Yeah. I mean, I second firstly, all the points which Effie and Rahul mentioned. Okay, it's a new opportunity to the users. It's an opportunity to the business. It's an opportunity to the entire ecosystem of doing things the same way, in a more efficient, more faster, more cheaper way. And it's all about educating, setting the narrative right in terms of what and how simple is this things, and needs to be clearly backed by regulation. If regulation is something which comes in play, helps the businesses, the entire ecosystem, the entire aspect of transactions which are being carried out, there is definitely a future in this, because at the end it boils down to the end experience of a trade payment or a business payment, who have been using a lot of documents, waiting for several days for the payments to come in, versus everything happening instantly. So it's just the taste which the business and the users needs to get onto this. And as you know, right, once you taste something which is something superior to what you've tasted in the past, You don't have to market, or you don't have to do a big push about it. It just goes on its own. So definitely like a bright future for this aspect.
I love it. Thanks so much to all of our panelists, Santosh, Effie, Rahul, for all of your comments. Thanks XDC and CoinSpot for sponsoring this one. And Amy Rose, I'd love to hand back to you.